You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Alrighty, everybody, welcome back to yet another episode of the Young Investors Podcast. Hamish Hodder, how you doing over there?
I'm doing good. I'm a little bit sleepy. My dog kept me up a little bit last night, a couple of times. She had to go outside, so yeah, that's the cost of having a little furry friend. But no, she's great. But
she's pretty cute. I mean, of all the dogs that I've met, she's pretty cute.
She gets away with pretty much anything because of that, though. So
yeah, true. Naughty and cute. Yeah.
Wow.
No, we got along very well when I was over at your place. Me and your dog.
Yeah, she's so friendly. She'll make friends with
friendly.
Pretty much anyone, as long as you're a little bit nice to her at the beginning. Some people, I think you can kind of tell, like people who are not super into dogs, they won't like go over and pat her, and then she's
okay.
"Who are you? Like you won't come and give me a pat." So no. Otherwise, it's fine.
Well, hopefully you're not too tired for the podcast. Hopefully we can perk you up. We'll perk you up, but we've already looked at flights a little bit for our nice grand old Omaha trip. We'll do a little bit more holiday shopping and a little bit and booking stuff in. So that'll perk you up. That'll get you excited. But yeah, that's the plan. The plan is go to Omaha for the Berkshire shareholder meeting. So fingers crossed it all happens. Yeah, I'm really looking forward to it. And I don't know if we can officially say this yet, but it's looking like our good friend Tom from the Investing with Tom YouTube channel is going to come with us, which will be very, very exciting.
Yeah. If you were on the fence, Tom, you now have to come. It's been made.
In fact, let's make it official. We are pleased to announce that Tom is joining us on our trip to America for the Berkshire Hathaway annual shareholder meeting. So Tom, congratulations. Everybody go over to the comment section and say thank you, Tom. Go over to his YouTube channel. Let's pressure him in. He can't back out of it now.
No, he can't. No chance. Yeah.
But yeah, that's going to be so cool. I can't wait. Never been to America, so I'm really looking forward to it. But anyway, back on the podcast, we have not a lot to talk about today. Truth be told, there is one interesting story that we will discuss, which is Mohnish Pabrai did another interview, where the whole interview was just completely about Meta stock.
Yeah,
so
I've never seen him. Has he done that before, where he just kind of does basically a podcast where they were basically live analyzing the company? Really,
they were.
It was very interesting. I didn't expect to see it, and but I'm glad it exists. It's there was a ton of
never heard Mohnish talk like that, just openly about a stock. And maybe that's because he said that he doesn't own Meta stock, so maybe he doesn't care. Like he doesn't like going into that sort of detail about current holdings. Yeah. So maybe that's the reason. But yeah, we'll talk about that because he said a lot of stuff. Like, I guess we'll save it. We'll get into it in a minute. But we've got that. There's a little bit of news about Elon Musk and the SEC, and Bitcoin donations to the Ukrainian military, which is interesting. Right. And I guess that's one thing we can't leave this unsaid. Is that obviously the number one story going around at the moment is Russia, their invasion of the Ukraine, which is obviously a very serious issue, and it's obviously not something that we want to see at all. I don't think we'll talk about it very much on the podcast, just because it's not super relevant to what we're talking about with stock market investing and value investing, but I didn't want to just go completely silent on it. Obviously, it's a massive issue, and we don't like to see any sort of warfare. So hopefully, there's some sort of something that can happen that can put an end to this conflict fairly quickly. And we also want to send our thoughts, because you guys don't know this, but there's a third member of the podcast, and that's Andrew, who's our podcast editor. who's been editing our podcast for how long?
A long time. Yeah, multiple years now. Yeah.
Years. He's like a key pillar to this podcast going ahead each and every week. It's not just myself and Hamish. And he actually lives over in the Ukraine. Is he Ukrainian? Do you know?
Yeah, he is. Yeah.
Yeah, he is Ukrainian. Okay, yeah. So definitely thoughts go out to you, Andrew. Hope you're doing all right, and if you have family over there as well, hopefully things aren't too crazy for you, and we're certainly thinking of you. But with that said, Hamish, I think we should get into some investing news.
Yeah, absolutely. So, cool. Today's
Should
episode.
we start with? Yes, sorry. Totally walked all over you there.
Not going to let me do the sponsored segment.
I forgot about it.
You want to do the sponsored segment today?
No, I don't.
That is what you told me just before we got on. You did say,
no,
Hamish,
it's not.
I just want to do it once. Just once. No, I'm just
okay,
kidding.
Hamish, that is not what I said. I'm being framed. Are you going to force me to do this sponsor segment now? Okay,
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So basically, you can bring in all of your trades either automatically or manually, one by one, or through Excel. And once you do, it'll track all of the different types of gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you, which is a lifesaver. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track performance and use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want. Or you can also use that link to sign up to a paid plan for more premium features, and you'll get 4 months off a yearly subscription if you use our link. So check it out. And thanks to everyone who's used that link and is supporting the podcast.
Absolutely. All right, should we get into the main topic? Mohnish Pabrai talking about Meta.
Let's do it. Wow.
So this is a very interesting 1 hour discussion, and I don't know, maybe I can try and leave a link because it's an unlisted YouTube video, which means you have to have the link to watch it.
Yeah.
But maybe we'll try and include that in the show notes somehow. But yeah, it was essentially a 1 hour chat with Divya Narendra, who is the CEO of SumZero, which is an investing community. But one thing, I didn't actually know this. I've watched Mohnish talk with this guy before, and I had no idea who he was. I thought maybe it was like a lecturer or some university or something. He is one of the people that started Harvard Connection, which was the early version of code that Mark Zuckerberg copied, built upon,
was inspired, I think is the words you're looking for.
Was inspired to steal and and make the Facebook.com. So this guy is actually very qualified to talk about Facebook, and it was actually interesting. He doesn't sound like he has much resentment for Zuckerberg or for Facebook. At least he didn't show it during the interview, but he actually spoke quite open and honestly, and I think he is a Meta shareholder as well, which is quite interesting.
Yeah, and they spoke a little bit about The Social Network, obviously the movie that came out of the whole Facebook thing, and Divya is a character in that show, and they were talking a little bit about how there's quite a lot of fiction in that movie, which I already knew, but it was kind of interesting to hear. I think he said that his character in the show kind of encourages the twins to go and litigate against Zuckerberg, but that wasn't true at all, which is kind of interesting. So obviously it's true. It's Hollywood. So obviously they're going to embellish and make it interesting. But yeah, I think a lot of people do kind of watch The Social Network and kind of go like, wow, that's exactly what happened word for word. But of course it's not. They had to make it, they have to make it interesting. So that was interesting to hear. And yeah, I didn't know who he was before this interview at all. Yeah.
Crazy. Yeah. What were the twins called? The
Winklevoss.
Yeah. Winklevoss. Winkle Dinkle.
Yeah.
Winklevoss twins. Yeah, that's right. But yeah, very, very interesting. So anyway, it turned out that there was this 1 hour long discussion about one of the people that you could argue wrote some of the original code for Meta, and Mohnish Pabrai. So it was very, very interesting, and they were able to talk very confidently and in a lot of depth about a lot of these issues. So with that said, where shall we start with this discussion?
Yeah.
There was a lot of things said. They kind of bounced from one topic to another. I think maybe the first thing that actually Divya, is that how you pronounce it, Divya? I'm not quite sure.
I'm not sure, to be honest.
But that's the first point he brought up, is that Meta stock was going down a lot because there were concerns about the user numbers stagnating. And one of the interesting points he brought up was that, hang on, they have 2.82 billion daily active users across their platforms. So his opinion is that the actual user growth doesn't matter so much. He believes the most important factor is the engagement, which I actually really resonated with. He said, I think what are the... It's more important to look at what are the 3.6 billion people doing when they're on the platform, because there's no doubt that the usage of the platform is steady. And I think that's true.
Yeah.
And that's what we talk about when we talk about Meta's quarterly earnings and that sort of thing. Yes, it's about how many people are using the platform and how that's growing, but a part of their revenue and their cash flows is also how many ads are being served, what's the price of the ad, what's the engagement with the ads, and that sort of thing. So that was an interesting point. It made me think, hang on, maybe user data doesn't actually, user growth doesn't matter so much anymore because of the saturation.
Yeah, and I think that also speaks to why the stock has been so volatile as well, because while there is a fair bit of clarity on how many users are on Facebook's platform, there's not a whole lot of clarity on how much people are using it, especially in relation to something like TikTok. So we know TikTok is massive. We know a lot of people are spending a lot of time on it. But there's not a huge amount of visibility between, say, Reels on Instagram, which is the TikTok competitor that Meta owns, and TikTok. How does the engagement, how much time are people spending on those apps? How does that look? Because we know that Instagram is the biggest social media platform in the world. We know more people use it than TikTok, but where is the time being spent? I think that's the big question mark for Facebook at the moment. And I also wish that they would, or Meta I should say, and I wish they would break out users into each category, because it doesn't really, I think it's not that relevant to look at Facebook in of itself anymore, because it's not really it's not as popular as something like Instagram. But we don't get to see Instagram on its own either, or messaging. That would be interesting to me. I'd love to see that. But I think just the fact that there's a little bit of a lack of clarity on how much time people are spending on these social apps, and because that's so important, I think that's why there's concern. As soon as there's a little drop in users, people are concerned that means that there's been maybe a larger drop in engagement.
And I think Divya went on to say, even though TikTok is said to be eating Facebook's lunch, I think is how he said it, that people have to remember that the TikTok and Snapchat, in terms of their size, their overall size and number of users, versus something like Facebook's family of apps is so small. And you can look at the financials of these different companies. And obviously, Facebook has the capital and the programming muscle to be able to just offer the same service. And of course, there was the original one, which was Instagram Stories, which was stolen, it was just built into...
Inspired. Brandon, we spoke about this, okay?
Inspired. Sorry,
Mark has instructed us. Mark has instructed us to use the word inspired, okay?
Oh, gosh, he's going to take me to court.
It is kind of funny, though. That's kind of Meta's bread and butter, is find something that works and make it better. Because the truth is, I mean... As much as I like what Snapchat did, and a lot of people like to say that Facebook stole stories from them, stories on Instagram is better than the Snapchat app has ever been. I mean, Snapchat is still not optimized well at all for Android devices, which is 75% of devices. So, of course they get kind of inspired from these other apps, but then they do it better. And that's why you end up winning. I mean, if they didn't do stories better than Snapchat, then they wouldn't have won. And I think that's why TikTok is doing really, really well, because Instagram can take that idea and create Reels, but Reels is not better than TikTok at the current moment for that form of video. And that's why TikTok is doing so well.
Yeah. And then Divya went further into that, and he said, you think about Facebook as a platform, you think about Instagram as a platform, and then you think about Snapchat, and you think about TikTok as a platform. And he actually went on to say, I wrote it down somewhere. Oh, I've lost it. But he essentially said that these new trendy apps, they kind of rely on like one or two features. Like TikTok, TikTok is just essentially one thing. It's just the short clips that you watch and you flick through, and that is their thing. Snapchat, you can say it's a combination of that kind of content and instant messaging as well, and picture, video messaging amongst friends and that sort of thing. But that's kind of what they rely on. Whereas when you then step up to the bigger company, which is Meta, where they have the Facebook, they have Messenger, they have WhatsApp, they have Instagram, they have the power to just offer the same thing. Yes, it might take a little bit of time. Yes, it might start out worse than TikTok or worse than Snapchat for a little while, but they have the power just to be able to build these things up. And then they also, remember, they have the network effect. They have the 3 billion people using the family of apps every month.
Yeah.
They have the user base where if you can implement the same thing, but to a wider number of users, usually that's a winning combo in the long run.
Yeah.
And that's why Divya ends up saying, look, I think people are missing the idea, like they think that TikTok's eating Facebook's lunch, it's the trendy thing. It might be trendy, but at the end of the day, these aren't like apps that are ingrained into your existence and your online being and your online life like a Facebook is.
Yeah. Yeah, and I think the cornerstone of Meta's business is the fact that they have such a, not a monopoly, but such a large position on messaging. I think that's a huge advantage, because even something like TikTok, you're going to want to share that with somebody else. Where are you going to share that? Okay, maybe iMessage, maybe. But in all likelihood, you're going to either WhatsApp, Facebook Messenger, or Instagram Messenger. And having that embedded in Instagram is such an advantage for Meta when they're building out Reels, because people can watch a Reel and send it to somebody and stay within the Instagram ecosystem. And that's a huge advantage that they will always have, competing against new kind of social apps like TikTok as they kind of grow. So,
absolutely. So I actually found listening to Divya's thoughts throughout this was actually very insightful and very interesting. I thought I was just going to go and watch Mohnish Pabrai, but I actually really found value in Divya's thoughts. But then we do get on to what Mohnish Pabrai was talking about, and Mohnish essentially said that he's not convinced that he wants to buy in, but he thinks that Meta is an easy double, in his words, over the next 3 to 5 years. And the reason that I guess the overarching reason that he said he's not convinced is that he likes their core business, which is their ads platform, their advertising business. He thinks that the Reels advertising he's not impressed with, but the main Facebook platform advertising on the newsfeed is very, very good. But he said, damn it, I want to find this. Everything relating to Meta is an option I'm not willing to pay for. I don't think Facebook themselves understand what Meta is.
Yeah.
So Mohnish is essentially saying, I like the ads business, and I think if you just look at the ads business and Meta as essentially Facebook, then he likes it and he thinks that there's an easy double, but he is skeptical and he's not willing to put money down as a bet on Facebook being the one that brings the metaverse to reality, I guess. What are your thoughts on that?
Yeah, I completely agree. I think especially if you're doing any kind of value investment, you have to completely disregard the stuff, the money they're spending on Meta. You can't really project out cash flow for that. And I would even probably go as far as assume that the money they're going to spend over the next decade, which whatever it was, I think it was like $180 billion or something insane that they said they were going to spend on the metaverse over the next decade. I would even assume that is just that they don't get anything out of that, because I think it's very speculative at this point. They'll definitely get some growth out of their hardware products like Oculus continuing to improve. But yeah, what kind of revenue they'll be able to pull out of this meta business, I think is extremely uncertain. But on the other side of the coin, I definitely agree with Mohnish that, I mean, I think, what was he saying? I think the stock is at like 11 times earnings, which is kind of insane for a business where, and I've spoken about this a few times, where the advertising industry overall, I think it's 33 or 34% of advertising is still done on television. And I think most of that is probably going to go away, because television is turning away significantly from taking advertiser dollars to taking subscription dollars, from offering their content on streaming services, even if it's live sports, offering them on streaming services. So collecting revenue from customers rather than from advertisers, which means there's advertiser dollars that have to go somewhere. So clearly, I think there's significant tailwinds for Facebook, at least over the next few years. I think my concern on the other side is what Mohnish said is true, that their newsfeed advertising business on Facebook is extremely good, but there is a massive shift away from one thing, which is desktop to mobile. And then also the way that people are consuming is moving away from newsfeed to shorter form video content, which is much harder to monetize. And then you get into, all the issues around tracking and regulation around how these apps can track. I think there's a lot of headwinds that make the future of Facebook beyond 3, 4, 5 years a lot more cloudy. So that's kind of where I sit on it. But I certainly agree that, I mean, with the stock sitting at, if it is, I haven't actually looked, but if it's sitting at 11 times, as Mohnish said, I think he said, even 5-10% per year growth would allow it to be a double over the next few years, which is very
current PE of 15.
Right. Okay. So 15, and I think Mohnish was saying 11 once you add back the meta cost. But as I said, I would probably assume that is just burned money, just because we don't really know if we're going to get that back yet. So to bet that, they're spending this money, but we're going to get it back, I think that would be a mistake, unless you knew something else.
Yeah, his quote was, I see a company where revenue is not going anywhere, cash flow is not going anywhere, it's pretty solid, user base is solid, even with 5 to 10% annual growth, which is not a big leap for them to get to, the stock ought to be a double at current interest rates. I think that's a reasonable bet. And then he said, when you're looking beyond that, if you're looking for something that's more than a 2x, I'm skeptical. Everything relating to Meta is an option I'm not willing to pay for. I don't think Facebook themselves understand what Meta is. So, yeah. I think that is pretty self-explanatory after what we've said. Is he would bet on the ads business continuing in its current form. And you're right, there are headwinds, but there's also that overarching tailwind that you described, which is online advertising.
Yeah.
But yeah, very, very interesting. But then Mohnish, another reason why Mohnish is quite skeptical on this metaverse stuff, and it's an option he's not currently willing to pay for, is that he's not convinced on the form factor. And he brought up the idea of, well, obviously to access today's version of the metaverse, which is in its infancy, you have to put on these massive VR headsets, which is clunky, and if we're just being honest, people are not going to wear those all day, every day, and work within the metaverse at its current stage. But so Mohnish was saying, I'm skeptical of whether, a company like Facebook can shift, 100 million of those devices annually or something like that, But what's an interesting point he brought up is he compared and contrast back to, say, Google Glass, and he was talking about how Google Glass, when it first came out, was like this amazing technology and the tech was there, but because they just got the aesthetics slightly off, they just got the practicality slightly off, then it ultimately failed. And he's like, there's very few examples of where everything just fell into place. He said, like, the iPhone is a piece of technology where everything did fall into place, and that's why it was so successful. So he's like, he's not convinced, based on what the current proposition is of like big VR headsets and that sort of thing, to really bring the metaverse stuff mainstream in the future. Yeah. But then, interestingly, Divya stepped in with a rebuttal, and he said, well, look at, for example, what Facebook is doing with Ray-Ban at the moment. Like, they started out, sure, Google Glass looked ridiculous and was clunky, but if you look at something like Facebook's collaboration with Ray-Ban, where you have literally the most iconic form factor of sunglasses out there, and they've got already a lot of built-in like camera tech in there, and you can tell, but if you're just like looking at someone from afar, you just think they're wearing Ray-Bans. It's like, you think about, that's where we are at the moment. What about the next layer of smart glasses, you know? He said they spent over, there's not that many businesses or people in a position to do that. They spent over $10 billion last year on their hardware initiatives. How many others can do that and still run at a 30-40% operating margin? What's the kind of next... Imagine where we are in 5 years or 10 years with that kind of force behind it from a company that's still raking in a lot of money. Yeah,
I mean, Meta is the furthest ahead in VR, AR, and they're spending the most money. So, you know, if you were forced to take a pick on who was going to do extremely well or win in this space, then I think you would be silly to pick anyone other than Meta. But look, a lot of this tech is so far out. I mean, we spoke about it probably a fair few weeks ago when Meta was kind of announcing all of this stuff. And the long-term vision is that you have a light headset that you can have at your desk, and whenever you need to jump into a meeting, or we're recording this podcast, for example, instead of just being on a Zoom call, we can just chuck on the headset. I guess maybe that wouldn't work for a video podcast, but let's say like where you have to do a meeting, we can just jump in and we're kind of in the room together, and we can kind of see facial expressions, and actually kind of have a meeting that's a little bit more closer to life. So I can definitely see that down the road, but I don't know that there's no timeline for that. It's kind of the same when people talk about autonomous fleets and that sort of thing. There's no timeline. Like, we don't really know. We know that the tech right now is not good enough, but we're seeing progressive improvements in it, and we can see that it probably can get to the point where we have fully autonomous vehicles and fleets. We can see that, but we just don't know. Is that 5 years? Is it 10 years? And I think the same thing applies for some of these things.
That's pretty much the main points that I personally took out of the meeting. Is there anything that you further kind of drew out of their discussion?
Yeah, there was a couple of little bits. It was interesting because Mohnish spoke a little bit about kind of the valuation at the beginning, his kind of initial thoughts on the valuation. And then Divya was kind of giving his thesis on the company. And then Mohnish started to kind of push back a little bit more towards the end. And he had some kind of interesting things to say. One was his comparison of Meta to other big tech. So Mohnish puts kind of Amazon and Tencent in a different category to all of the other tech companies as two businesses that have been, as he said, off the charts at capital allocation. So, and he kind of described a little bit about their strategy. So what they would do is they would take their available cash flow and make a lot of smaller bets. And these are still big bets, $100 million, $200 million on a certain business venture. And then a small number of them pay off in a big way. And that's kind of the way that Amazon and Tencent have both been able to grow at such a massive rate. And he spoke about Amazon Web Services as being one of those small bets that is already a massive part of their business and will probably be much larger in the future. And that's a very different approach to Meta, which is all in on one bet. They're pretty much saying, we are going to win the metaverse, and that's it. And I think Mohnish said that he prefers businesses like Amazon, where they experiment with lots of smaller bets and see what works. Whereas with Facebook, or Meta, I should say. I'm going to get that wrong till the end of time. But Meta is obviously reliant on them being right on this one bet. So we'll see. But also, he did give Mark some credit that that's kind of been Facebook's bread and butter from the beginning, is all in on one thing rather than kind of trying to diversify the business. So I thought that was interesting to hear his kind of thoughts on that. And it's kind of interesting as well because it's almost the opposite approach to his investment strategy. Like, he invests in a small number of businesses, concentrated, big bets, but he likes the companies that he invests in to make a lot of smaller bets. So it was kind of interesting to hear that, because obviously he's invested through Tencent. So I thought that was interesting. Do you have any thoughts on that? Or
I was just going to say, I just think it makes sense that he likes spawners. He likes big companies that can spawn new businesses and have the capital to be able to, have 10 different startup. Really, that's what they are, like little startups on the go. Yeah. And 9 out of 10 will not go anywhere, but one of them will, and it will be the next big business. So you can understand, and that does make sense. If you just look at, okay, what companies allocate their capital very well, and then, okay, let's pick a very good capital allocator that likes to also try and spawn new businesses as opposed to going all in, because then you've got protection in two ways. You've got yes, they are good at capital allocation, and then yes, they've got the diversification in startups to have a lot of opportunities for each one of them to grow. Whereas if you have a really good capital allocator, but they're trying to allocate the capital on one bet, then there's always the possibility that one bet doesn't work out, even if they are very good at putting their money into various parts of that. If the overall bet doesn't work, then they're like, oof, ouch. But so I can understand why he likes a company like Amazon or Tencent.
And then just the other thing that they went on to talk about was Mohnish asked whether Meta will be able to monetize WhatsApp, and this is something that Zuckerberg has spoken about kind of off and on for a long time, which is that they are going to be able to do some kind of monetization there, because it's a massive application, but at the same time, it's entirely private messaging. So it kind of begs the question, where is the opportunity to run advertisements within WhatsApp? I know they tried to run advertisements on Messenger for a little while there, and I'm not sure if they still do. I don't know. But I know that I remember a while back, I can't remember exactly how it worked, but it would be if you communicated with a business through Facebook Messenger, then they would have the opportunity to retarget you and send you send you some kind of messages through Facebook Messenger. I remember using it once a long time ago. I don't even know if they still do that. But anyway, the question really was, how are you going to monetize this app? And I think obviously it's going to be very difficult for Facebook or Meta to run advertisements within WhatsApp. But they're looking, Divya was kind of talking about how they're kind of looking to come at it from a different approach. So WhatsApp is used by a lot of businesses to communicate with customers. So they could potentially provide sort of a paid version of WhatsApp or Messenger for businesses. So essentially giving them access to more tools to communicate for support or whatever it is with customers. So I thought that was interesting. Again, this is stuff that's not really it's in development, I guess, at the moment. So we'll kind of see what Meta does with that platform. But yeah, it would be interesting to see if they can activate the huge number of people who, within their, whatever it is, 3.5 billion monthly active users on all of their apps. I would bet that a big chunk of them would be using WhatsApp and maybe nothing else. I know that's certainly the case in India. There are a significant amount of businesses that use WhatsApp, and those people may not use the other social apps. So if they can activate those users, then that would be very interesting.
Yeah, so I guess I wanted to round out the conversation because that's pretty much what they were talking about. So I guess the main takeaway here is what Mohnish really said. That's really the headline of it, that Meta could be a pretty easy double, even just based on their ads business and their current market cap. I'm interested in hearing like what your thoughts are about that statement. Do you kind of agree with that? Do you disagree? Do you agree with Mohnish on the whole metaverse stuff, not making a bet on it? What are your kind of conclusions on it?
Yeah, I completely agree. I mean, I'm invested in Meta, just for full disclosure.
Actually, I think I am as well.
But
yeah, I am actually.
Yeah, I mean, the way I look at it, and have so far, is I don't consider Meta at their metaverse, business at all. I'm not making projections about what that could be at all, and I'm completely assuming that any money they spend, which as I said I think it was 150 or 180 billion over the next decade, I'm assuming that it just goes to waste, and we get to the end of the decade and Zuckerberg says, look, we tried. That's really how I view it, because it's so money. Speculative. And look, maybe I could put a small number on it, or it could be a couple of $1 billion in extra cap, but that's just ridiculous because there's no way for me to rationalize that. So it entirely has to be based on the ads business. And then I think it just depends on what your valuation, it'll really just come down to your valuation and what you think they can do in terms of their ad business. And
growth rates. Yeah.
There's a lot of factors that go into it. I think it's become increasingly uncertain, which is why I agree with the 2 to 3 year horizon is really where there's quite a lot of clarity. It's quite easy to see some growth in their business, but beyond that, I mean, the iOS update, that limited tracking on apps was massive. It had quite a significant impact, Facebook had noted. And Google is now saying, they came out with this a couple of weeks ago, that they'll probably implement the same app into Android, which means that you're going from a very small portion of phones to pretty much all phones not being able to provide this kind of tracking. And that's a big deal for something like Facebook. Not as much, it would affect Google as well, but not as much, which is why I think it's likely that Google will end up implementing this into Android. Because if you think about the way that the two businesses advertise, Facebook, or Meta, I should say, heavily relies on pixel tracking, which is where they put a little tracker on you when you visit a website, and then they use that to target you in Instagram or that sort of thing. So if you go clothes shopping on a website and then you go and use Instagram, you'll see those ads in Instagram. So Facebook Meta is very heavily reliant on that kind of tracking, whereas Google, like Google Search, for example, they get all of the information they need for what ad to serve when you type in the search bar. You just search for something and then they provide you ads related to that thing. And the same thing is very true on YouTube, where the person is pretty much providing all of the information directly to Google or YouTube. And I think that creates quite a bit of... that to me is concerning for Facebook long term, because we may enter a world where it's not normal or acceptable for businesses to track you from website to website. And if that's the case, both will get hurt. Both Google and Facebook will get hurt, but Facebook will be hurt much more from that. So that's my concern. And that's kind of the cloudy side. You've got the tailwind of a lot of advertiser dollars coming over still from TV. So you've got to make a judgment about how much of that Facebook can capture. And I think that's really where the question lies.
And that's one small point that I remember that they actually brought up in the talk, I think at one point as well, is that Facebook needs to learn to serve a better ads experience with less personal data.
Yes.
If they want to like properly future-proof themselves, they need to figure out, okay, how can we still create a really tailored ads experience, even if we don't know as much about you as what we currently do know?
Yeah.
So that will be a very interesting question, as whether they can do that. But all right, very interesting. Well, we spoke about that for a long time, didn't we?
Yeah, it's. I mean, it's not.
But fair enough.
Yeah.
the main thing to talk about this week. There's really not that much going on apart from the Mohnish Pabrai interview. Besides, because obviously the news has been overtaken very sadly with all the events of Russia. Don't want to dismiss that, saying there's nothing going on in the world at the moment.
Yeah,
that would not be the right thing to say. But yeah. With that said, what should we talk about? Should we talk about Elon Musk?
Yeah, what's going on? What's Musk up to? What's he?
This is just a little funny story. It's actually two stories in one. It's kind of interesting. Elon Musk cheers on the Justice Department probe of short sellers. Tesla CEO Elon Musk told CNBC he's glad to see the Justice Department is investigating short sellers who have long been a target of the billionaire's ire. He also took a fresh shot at the Securities and Exchange Commission, who would have thought, another of his frequent targets. Quote, "I am greatly encouraged by the Justice Department investigating short sellers," Musk told CNBC in an email on Tuesday. Quote, "This is something the SEC should have done, but curiously did not." Quote, "Too often, sophisticated hedge funds have used short selling and complex derivatives to take advantage of small investors. They will short a company, conduct a negative publicity campaign to drive the stock price down temporarily, and then cash out. And they do it over again many times. The term for this, as you may be aware, is short and distort."
That's great.
Yeah, but obviously Elon, he has not had the best of times with short sellers. He doesn't get along with them very well, does he?
I mean, of course, and that makes sense. But at the same time, I mean, what he just described is just what happens in the stock market when it comes to shorting or people going long. I mean,
the other way around as well.
How did he describe it? They short a company, conduct a negative publicity campaign, drive the stock price down temporarily, and then cash out. The same thing happens on the other side. People will invest in a company. They'll conduct a positive publicity campaign to drive the stock price up and then cash out. Happens all the time. Yeah. And you can't say that companies like Tesla, for example, they do things all the time that excite investors and drive the stock price up in the short term. So, I don't know. I guess. I don't know too much about...
I'll read you the rest of the story.
Yeah, go for it.
The DOJ probe, according to the Wall Street Journal, is focusing on alleged instances of so-called spoofing and scalping. Spoofing involves illegally using fake orders to pump or crash a stock price, while scalping refers to when activist investors close out their positions without disclosing the move. Muddy Waters Research founder Carson Block, a vocal critic of Musk's who has shorted Tesla stock, is reportedly among the investors who have been served search warrants by federal investigators in the short seller probe. Andrew Left, another one-time Tesla short, had his computers seized by federal agents, according to Bloomberg. Left said in 2020 that he was shorting the company's stock. So there you go. Wow. Maybe Elon finally gets to laugh a little bit back at the short sellers, but guess what? almost as a point of retaliation, the SEC... This is the second part of the story. The SEC have decided they are continuing their investigation as to whether recent stock sales by Tesla Inc. chief executive Elon Musk and his brother violated insider trading rules, according to, guess what, people familiar with the matter, Hamish Hodder. The SEC's investigation began last year after Mr. Musk's brother, so Kimbal Musk, sold shares of Tesla valued at $108 million one day before Mr. Musk polled Twitter users asking whether he should unload 10% of his stake in Tesla and pledging to abide by the vote's results. Yeah. So this is not going away. The Kimball's still going to have to answer. It says here, Kimbal Musk sold 88,500 shares one day before Elon tweeted about the potential sales. The Tesla shares fell sharply in the wake of his poll. Kimbal has often traded Tesla stock under a 10b5-1 plan, according to the securities filings. I'm not quite sure what that is. I imagine that's like the scheduled selling plans. Yeah. He's had more than 40 disclosures since 2011, indicating the sales were made under the plan, according to regulatory filings, but a disclosure filed with the SEC on November the 5th didn't say that he used such a program for those trades. The filing said he donated 25,000 shares to charity, in addition to selling 88,500 shares. After the sale, he still owned over 500,000 shares. So,
right.
Interesting. I think that the point that's going to be brought up is about this premeditated selling plan? Because you've spoken about this on the podcast before, how a lot of top dog CEOs, they opt into like a scheduled selling plan, right? Yeah. So that they can avoid people calling them up and say, hey, was this insider trading? They have the data, right? They can say, no, look, I've planned this for months.
Yeah. Yeah, because, I mean, naturally, there's going to be coincidences all the time. I mean, there's news, especially for a business like Tesla, and with a CEO who loves Twitter as much as Elon Musk, there's always going to be things that are happening that are going to move the stock price. So even if you didn't insider trade at all, naturally, there's going to be moments where you make a trade and then it works out really, really conveniently. But I think it is going to be interesting because if it actually was outside of the plan or the program of scheduled trades, but he does have a schedule of trades, that looks even worse than if he had no schedule and he could have just claimed, I always do my own trades and it was just a coincidence, which is not a great argument anyway, but it's almost better than having a schedule and then trading outside of that schedule. that does not look good at all. So that'll be interesting. Yeah. But yeah, I don't know how they prove this beyond a reasonable doubt. I presume is the same, or maybe not. Maybe that's not the standard. I don't know what the standard is for them to go after someone on this. But yeah, how do you prove that they intentionally did that? I don't know. I guess maybe they could get like phone records or something like that between the two. I think so. Interesting stuff. I don't know.
I have no idea. No idea how they're going to prove that. But yeah, I agree with your point that it does look bad that they have the premeditated stock sale schedule, but this was done outside of that. So it's like, oh, well, that's a tricky one. But I guess, like what you say, they still have to prove it. But anyway, that is the story of Elon Musk. That is Elon Musk Watch for this week, everybody.
Elon Musk Watch. Oh, that's good.
Only one more story that I quickly had is that, interestingly, this is just it's not a huge story. It's just a fancy headline that interested me to click on the article. Bitcoin donations to the Ukrainian military are soaring as Russia invades, which is kind of interesting. Bitcoin donations to the Ukrainian army are soaring after Moscow launched large-scale offensive against Ukraine early Thursday. New data from blockchain analytics firm Elliptic shows that over a 12-hour window, Thursday, nearly 400,000 in Bitcoin was donated to Come Back Alive, a Ukrainian non-governmental organization providing support to the armed forces.
Right. Is that
the fresh?
Oh, sorry. All I was going to say was, I wonder if this is in relation to the cyber attacks that were made on Ukrainian banks. I think a lot of banks went down before they moved in through a massive cyber attack. So I wonder if this is in relation to that as kind of an alternative way to get money in and out. I don't know. It
is interesting that it does kind of make me think that, I guess you would just send over some Bitcoin. But then again, this is a bit of a clicky headline because, I mean, $400,000 worth of Bitcoin, I mean, what's that going to really do, I guess? It's like, how much does like some of these arms and tanks and stuff cost millions and millions and millions and millions of dollars. So I think that there was kind of like an interesting headline, but when you break it down, I mean, I think in terms of like a war effort, I don't think $400,000 gets you very far.
You'd have to imagine they're going to get a substantial amount more in donations than 400,000. I think you're right. I think it's just that regardless of how much it was a good headline.
So. And I do find it interesting that, a way to support war efforts now is just like, can you just send us some Bitcoin?
Yeah, that's crazy.
That to me is just like, it's kind of weird. I never would have thought that that's like a viable way. But anyway, only a short story that I found that quite interesting. But with that said, we've got about 10 minutes left. We have time to do some Q&A, Hamish.
When's the last time we did? Did we do one last week? Or no, we didn't.
We probably did one or two, but we haven't had like a block of 10 minutes. We've always just been like 2 minutes before we finish up. It's like, quick, let's do a Q&A questions. So,
all right.
So yeah, we have a little bit of time. Should we just start at the top and work our way down?
I'll read this first one to you. Once you buy into a company, how often do you read up on them to keep updated, and what websites do you use for this information?
Yes, good question. We actually had a few questions I noticed that were quite similar to this. And this is the thing, you definitely want to keep up to date on what's going on with your company. That's like a very important thing. Once you're a shareholder, you have to keep up to date with what is going on. But I think there's a little bit, people tend to take a phrase like that and think, okay, I'm going to watch the news headlines every morning for what CNBC is saying about Facebook or about Google or stuff like that. I don't think that that's healthy. But definitely, obviously, we get 4 reports, 4 quarterlies out of the company itself each year. So definitely you want to be reading through at least, the financials and the management discussion of the financial results for each of those reports. I would say you definitely want to listen to the conference calls because you get a lot of extra tidbits out of the conference calls. In terms of websites, what websites do I use for this kind of information? It's really just the company's investor relations pages. You can use, if you want to look at like historical data, we use like QuickFS, and sometimes they use hypercharts and that sort of stuff. I'm sure I'm probably missing a few. Can you add to that list?
Ticker is a good one as well. TIKR.
Ticker. / Hamish Otter.
Yeah, that's right. .com / Hamish Otter. No, that's basically it. Yeah. So what I do is with any company that I end up investing in, which is not all that many, but I head over to the investor relations page, and you can usually sign up to a newsletter to get email notifications when new press releases are released. So I'll get that. So I'll always have a feed of every single press release coming to my emails. But I won't be kind of reading most of them. Most of it will be like changes in beneficial ownership of stock, and it'll just be someone an executive getting their stock options or whatever it is, right? So most of them I just kind of skip by them, but I at least get that feed in. So if there is an announcement such as they're making an acquisition or they're doing a capital raise to take on a bunch more debt, I'll see it in my email. So I do that. But in terms of what I'm actually reading deeply, it's probably just the quarterly filings most of the time. So yeah, and then like once a year, I'll kind of revisit my analysis and kind of think of it all over again. So yeah, that's pretty much it.
I actually have quite a similar, kind of a related question here, which says, hello from Iowa, USA. Hello. We're going to be not far away from you in a month or two. Yeah, we're going to pretty much be, I think it's right next to Iowa, isn't it?
I have no idea.
I think so.
I don't know.
Yeah, I think so. Omaha. Yeah. Anyway, was reading through an annual report yesterday and started listening to an earnings call today. Got me thinking, what do you guys like better or do more often? Do you read annual reports or do you listen to earnings calls? Long-time listener and fan of both channels. Thanks, mates.
Yeah.
What do you think? What do you like more? Do you like annual reports? Do you like conference calls?
I definitely spend more time on annual reports. So that probably gives you my answer.
Yeah.
I love annual reports. I don't know. It's just...
there's everything you need.
It is everything you need, and there's so much in there, maybe not in just one annual report, but across time as well. So I like to read the latest one when I start looking at a company, and then I'll usually go back as far as I can go, and I'll read snippets of them in chronological order, so I can kind of understand how this business has grown. So they produced, 50 million or whatever it is, to maybe it's even 10 million in profit, something really small 20, 30 years ago. And they took that 10 million and they invested into this. And then the next year they did 15 million. And just understanding how the business developed from a tiny company and what challenges they faced over that time. Because of course, pretty much no business just goes for a 2-decade period with no issues. They're going to face problems and kind of seeing how they overcome them. So you get a lot out of reading a lot of annual reports, I think. But conference calls are really good as well. I think conference calls give you a really good idea about what are the current issues, or at least what investment firms and analysts are worried about, which is not always something that's relevant to the business long term, but at least you get a gauge of what is influencing the stock price. And what are the major concerns at the moment. And you get to kind of hear how the CEO answers questions live. I think that's very, very valuable to kind of see the honesty and the transparency, or whether the CEO is kind of avoiding answering certain questions over and over again.
Yeah. No, I agree. I love reading annual reports, and sometimes I get people saying like, oh, how do you get up to speed with this stock? Like, for example, I didn't really understand the nuts and bolts of how a company like Visa worked. So I was just trying to read up because it was a big super investor buy last quarter. So I was just trying to read up, like, how does Visa actually work? And all you have to do, like, people think, oh, you did hours of research on the internet, you probably read through some crazy publication from somewhere. No, you just go to the Visa annual report, and the first item on the annual report is a full explanation of their business, where they do a complete deep dive in how Visa works.
They have diagrams and everything. In the Visa one, I think it was a MasterCard,
acquirer across to issuer, issuing bank, and the facilitation and the transactions and the fees and that sort of thing. It's like, oh, okay, this makes sense. It tells you what Visa is and what it isn't. Like, we're not a bank, we don't bear credit risk, this and that, and this is what we do, this is what we don't. It's just like, it's all there. You can go to any company, probably any American company, because the SEC filings are very, very good, the annual reports. And you just read through it. It says, what is the business? It'll give you a descriptor. It'll tell you what are the risk factors. It'll go through every single risk factor you could probably think. It'll go so deep that it's like, a risk factor is our CEO could have tied his shoelaces together and fallen over and got a concussion. That would negatively impact the stock. I mean, it just goes into the craziest level of detail on these risk factors that you can understand, okay, what is the risk of investing in this business, you know?
Yeah.
So there's just so much. I think people really don't, they probably just go straight to the financial results. They probably just go straight to, okay, let's have a quick squiz at the income statement, balance sheet, cash flow statement, and maybe a quick squiz at the management's discussion of the results. But yeah, if you actually read an annual report, you're like, wow, there's a lot of information in here.
Yeah, and to be completely fair, I think there are a lot of annual reports I've read where it's not laid out well, or there's really not much of a description. I think it is kind of a testament partly to the management team as well as to what they decide to put in the annual report, because there's obviously the disclosures that they have to make legally, and then there's a decision, do we give them more data, but then we're also giving our competitors that data on us, right? The more insider kind of business factors or indicators, like daily active users for Facebook, for example, like they don't have to give us daily active users. They choose to give us that, but they're also giving that up to competitors. So there's kind of a balance you see, and some companies decide to keep everything very, very private, and other businesses just give all of that information. They give their investment strategy and all of these different things. So it does vary, I would say, but yeah, there's always a ton of information, and what you can't find in 1 year's annual report, you might be able to find in a previous year. If they make an acquisition in 1 year, they're not going to talk about that acquisition in every single annual report going forward. It will just be in that one annual report from that year. So you have to kind of go back over time and look through different reports.
Yeah. Should we do one more?
Yeah, let's do one more. All right, I'll read this one to you. With dollar cost averaging being the preferred method for a passive... Stop moving the document, Brandon.
Sorry.
Brandon just deleted something above the question and it just shot up.
The document just changed. My mistake. Sorry.
No, you're right. I'm just joking. With the dollar cost averaging being the preferred method for passive investors to build their investment, would the strategy be to reverse dollar cost average when taking money out of passive investments? For example, if you need or choose to reduce your investments due to a stage of life or unexpected scenario. I don't think we've ever had that question. That's a really interesting one.
It's interesting, isn't it? Yeah, I think just broadly, as you get older, I mean, it makes sense. When you're younger, you can have quite a bit of exposure to the market. But as you get closer and closer to the time where you're thinking about hanging up your boots, you want less exposure to just market risk. Like the idea that you have all of your money in the stock market and the stock market can go down, and it could go down quite substantially. So you definitely want to like reduce your exposure, I would say, as you get older and older. And I guess that's why a lot of retirees tend to look at more fixed income methods of investment, annuities, etc., where it's just like government bonds. It's like, yeah, you're going to get your money back. You get a little bit more. It might not be as fantastic as if you invested in the next kind of big up and coming stock, but it's lower risk and it's more sure of the payout. But I think generally speaking, if I was approaching retirement, I haven't thought too much on this. But I think I would just generally just take what I needed. There's also the complication of tax when you start getting a little bit older. It's just like, well, if you start selling down your assets, how much capital gains tax are you going to pay? Can you sell down slowly over a number of years to keep yourself in a lower tax bracket, to pay less tax, obviously? So I think there's a lot of factors that are very individual that can influence what you actually do when you're taking money out of the market. I don't think there's like a one solution, one size fits all kind of approach. But I think generally speaking, I'd still want most of my money. I'll put it another way. I don't really want to keep, as an old guy, I wouldn't want all of my money to just sit in cash.
No.
I would want it still trying to work for me. And I think as I needed cash because I wasn't producing active income by working, I think I'd just try and take what I needed, but I wouldn't just try and cash out and be a millionaire or something.
No, yeah. You would probably look more, as you said, towards more fixed income, or if it's still in the stock market, something that's a lot less likely to be affected by changes in economic conditions. So businesses that kind of sell the same amount of, they have the very strong competitive advantages, very well established, and they're not likely to kind of change the volume of sales too much in different economic situations. Those businesses can pay consistent dividends, and their stock prices are likely to be a lot less volatile. And even if stock prices do go down, as long as the business can continue to function, it can continue to pay the dividend, right? So it doesn't really matter what the overall value of the shares are if it can continue to pay you dividend income that you can live off. So, but yeah, that's probably where you would end up doing something more like what Ray Dalio does, which is very wide diversification and trying to eliminate as much volatility as possible. Would probably be where you would go. So yeah, the investment strategy definitely changes massively. I mean, right now with, the investments we're looking for, a lot of the time we're looking for businesses that have a significant amount of opportunity to grow, rather than, strictly businesses that already produce a lot of cash flow and will be very stable over time. So yeah, that's kind of my thoughts on that.
Nice.
All right.
Well, let's wrap things up. That was great. I do like answering the Q&A questions. Keep them coming. Head over to the YouTube version. Drop us a comment. Whatever question you like, we'll chuck it in and we'll get to it. But yeah, we are once again doing our video broadcast today. So if you want to see our lovely faces, then you can watch us. If you're a Spotify or a Apple Podcast listener, you can watch us over on YouTube as well. And Hamish, you're going to look into getting our video on Spotify, aren't you?
I don't know.
I don't know. Can anyone do that?
I had a very, very quick look at it the other day, and from what I read, I think you can. So I'm going to try and do it. We'll see. We'll see what we can do.
We'll see if we can upload it to Spotify. Yeah, maybe that'd be pretty cool.
Yeah.
Spotify listeners, you could watch us as well.
There you go. Beautiful. All right. Well, we'll see how that goes. Thank you, as always, Hamish, for joining me. Good discussion today. That was solid. Yeah. So thanks for that. And of course, guys, thank you very much for listening. We appreciate your time that you give us every week to sit down and listen to the Young Investors podcast. And thanks always to Sharesight for sponsoring, and thanks to you guys for supporting Sharesight, which of course supports the podcast. So we appreciate it. But with that said, guys, we'll wrap things up. We'll get out of here, and we'll see you next week. See you guys.